Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, all these previous rejections to the upside were created, so every time the market tested this zone, it respected it as support and demand, and at the moment the market is testing again the exact same level. So there is an increased probability from here to see once again a potential rejection to the upside, as already happened in the past when the market was testing this exact same zone. So the monthly time frame does seem quite bullish. Let's drop down on the weekly time frame and see what we have. Well, from a weekly perspective, there seems to be an inversion of trend currently that the market is undertaking. We can notice, in fact, how the market went from creating lower lows and lower highs to then creating equal lows with this double bottom being created here and equal highs. And now the market has just printed the new weekly higher high. So what the market seems to be doing here is shifting from a weekly bearish market, and the definition of a bearish market is the creation of lower lows and lower highs, to now a creation of higher highs and higher lows. So a shift from a weekly bearish market to a weekly bullish market. And the transition pattern in this case from the bearish to the bullish market seems to be the double bottom, which we can notice exactly here. So the weekly time frame at the moment is quite clear. We can notice a clear inversion of trend. Perfect. Let's keep that in mind and drop down on the daily time frame. From a daily perspective, I did speak about EURUSD just a few days ago. I spoke about it when the market was here, and I explained all the reasons for which from here I was expecting this rejection to the upside, which is in fact exactly what the market just did. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. But at the moment, what do we have on the technical side? Well, before we dig deeper into what we have here from a technical perspective on EURUSD, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing on this pair. Now, if we're looking at the data for the euro, the first thing that we have to keep in mind is that if we're looking at the euro, we're actually already looking at EURUSD, because all currencies on the spot are traded against the USD. And we can notice how we went from having minus 64.4k net positions all the way up to having minus 25.4k net positions. So we have seen a strong increase of the net positions, showing how institutions have been moving back to the bullish side for the euro, therefore to the bullish side for the EURUSD, because you have to keep in mind that if we're looking at the data for euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And we can notice how with the last two reports, institutions first added 4,700 longs and closed 8,200 shorts on EURUSD. And with the very last report, they added another 12,300 longs and closed 13,600 shorts, reaching at the moment a positioning of 182k longs compared to 208 shorts from an institutional perspective. So in the long term, the trend seems to be quite clear. They are increasing their longs and decreasing their shorts, going from 152k longs to 182k longs, and decreasing their shorts from 230k to 208k. So as institutions are moving back to the bullish side for EURUSD, we have to keep in mind that that is happening and move to the technical side to see what we have. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which also you find linked in description, so you never miss new updates. Now, back to the analysis. So from a daily perspective, we have to keep in mind that at the moment the market is breaking above structure. This level was acting as previous resistance here, again respected as resistance here, again respected as resistance here, again respected as resistance here, and at the moment the market is breaking it to the upside, meaning that all this previous resistance that the market was facing right here is currently being breached to the upside. And if a previous resistance level is broken to the upside, that previous resistance becomes support. So if the market will now successfully complete this impulse to the upside and then go for a retest, in a situation like that, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market, but the best timeframes when it comes to identifying early shifts in the trend of the market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. So if the market will successfully break and retest this level, if the market would shift from an intraday bearish to a bullish market and institutions continue to add longs and close shorts, at that point, I definitely wouldn't be surprised to see a potential rejection to the upside away from this area, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, I would really suggest that using the link in the description, you go and check out my website. In fact, here you have the possibility to gain access to the best trading program on the planet. First of all, you gain access to all my courses. Now, the courses go from the very basics of charting all the way to the most advanced topics like building automated trading strategies using the MQL4 and MQL5 languages, to building portfolios of strategies and using quantitative finance tools like the Quant Analyzer to do all of that. You also gain access to the Trading Station software with the Telegram notifications integrations, one-on-one mentoring directly with me, the COT data software that you very often see me use directly in my analysis here on YouTube. You also have the possibility to gain access to all my EAs. Now, you see here on the website presentations from each and every one of them. And you also have the possibility to gain access to my live trading show. So a live stream coming directly from my account of all the trades that I execute, open, close, manage. So basically a complete live stream. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access just below here, the testimonials, with a massive promotion. Now, there's still time to join, so I really suggest that you go and check it out. For this time slot, there are still spots. You can gain access directly from here, and automatically you will find yourself on the student dashboard using the email and password that you will create during the checkout process. So also that completely automated. Now, you find the link in the description of this video. I really suggest that at least you go and check it out, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.